Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today. Europe was off small but is now positive. In Asia, the Shanghai is down 2%, but the Nikkei held firm. Not much to go on overseas. It looks like everything kind of stayed intact, right?
Yes, after the big runs we've seen over the course of the multiple months, nothing's really faltering too much. Okay, in Europe we were down small, and now, like you said, those indices are positive. If you take a quick look at the chart of the EWG, you will see, it finally broke the downtrend. We've been drawing this, I think, for so long, and then, it gave a little bit of a nudge above it here, but really look what it did. It took back the 200-day with a huge gap. So for it to actually hold in and not fill a big portion of that, that's showing you some strength out of Europe. Now I know, the Shanghai was down 2% or so, but it's been lagging, but not a headwind right now. So we'll see if the FXI, that also has been approaching the 200-day, could hold above, the 8-day. So if you look here on the FXI and you get a little bit closer, you will see, this indice that's a laggard indice is still holding above the 8 and 21-day and trending somewhat. So overseas is not a headwind. It's a bit of a tailwind, all depending on this session.
S&P futures were down 6 to 7 handles this morning, but have since turned flat after kissing 2100. Do you think that they could reach all-time highs here?
Well, yesterday they kissed 2100 and then backed off because some of the weakness in tech, but then held firm. And now today, this morning, the future's down 6-7 handles. Maybe we could buy a little bit of the dip, and by the time you get into the office, they're back flat. So, the trend is still intact and still strong. And until we get a decisive break below that 8 and 21-day, it's hard for you to fight it or be short. You look here at the chart of the SPX, and you will see, lots of tradable pivots. That's what I try and put in my note. That's what we try and do here on the call, is show you how to stay with the move. Here was your double bottom, and I know that was hard to trust, but then really, this is when the rally turned on, technically. This, commitment confirmed the double bottom, and then ever since it took out this resistance, it's been trending above the 8 and 21-day moving average. And every time it makes a new pivot, it's somewhat hard to trust, but it keeps proving itself. So this was your last spot that it took out, and now it closed at highs. If you want to look to the left a little bit first, here's a little bit of a more magnifying look for you. So at this point, I would say, I've been saying a lot the last few weeks, you can't get too bearish if. Well, you can't get too bearish if we now hold above 2091, which is yesterday's low. And we'll see how we handle yesterday's high today. Hopefully we just digest and not run away a little bit. And then if you go to the points of reference here, okay, you now have two of them. One we hit yesterday, this 2103, and then your next one is here at 2116, and then all of a sudden you're contending with last year's range. So at this point, the trend is still strong, and you have to look for quality names.
Right. Technology and bios were a source of weakness yesterday. How do you think they fare with the weakness in Intel this morning?
Well, Intel hasn't been that important to the overall technology landscape, but it'll be interesting to watch for sentiment. Yesterday, the Qs got hit hard, but held pretty much where they had to, and that's been also another theme, holding where they have to keep some momentum. So if you look here at the Qs, you'll see that you did get a red candle yesterday. Woohoo, a red candle. But it did hold the 8-day again. So this little support range is usually good to know. It looked like it was going to fail and then held. So I'd say can't get too bearish if, this holds this 110. Yesterday's low was, actually 109.88. Okay, as it does some work. And then here is your resistance. If you want to look at Intel, for some reason my gut's telling me that it might go positive today. Intel's done absolutely nothing for the past 3 months, so it wasn't pricing much in. I would look at, if you don't want to trade it, that's fine, but I would watch this spot here. This is like 31, and then you have another moving average here. So it would be very surprising to me if it goes much lower than this. And if it happens to go green, that will probably help tech. And like you mentioned, bios were weak. That's because of this. Look at this ILMN. Look at the size of that gap down, okay? So basically, this to me now, is in the penalty box. So the question is, what does it do in this little range? And if you want to trade the stock and you think that this was overdone, maybe, you could trade versus this pivot, which is 132.51, and then here is your big gap, and it's going to have to get above this to fill a portion of it. But the longer this stays unfilled, the higher the probability that more damage can occur here, and that will probably put some weakness on the bios. And if you want to look at the IBB, you'll see that it didn't fall apart yesterday, and we did talk about 277, which was right here. So again, the theme is you can't get too bearish if this holds. And right now, that support is 277-ish, and then if that holds and goes sideways at some point, maybe it starts to head back towards that 200-day.
Banks have been trading well since reporting, and Goldman Sachs was the most recent and it reversed higher. I know you went long it, Scott. What level does it need to reach for that upside?
Yesterday I was talking about the back and forth with the banks. The bank rally started on JP Morgan and then extended on Bank of America and then kind of digested on Citigroup and Morgan. So Goldman, I thought, was like going to be the deciding factor on whether or not you get a little bit of follow through. And it was down $1 and then wound up going green. It traded up above that 162 pivot. If you want to take a quick look at Goldman, I'm thinking that it is Goldman Sachs and it has done absolutely nothing for so long, and that if this market wants to hang in there, the earnings are out of the way. The chart to me looks okay. It did engulf and take this out. So I'd say as long as it holds just say 161-ish, I'll stay in it. And if it wants to try and get up towards the 200-day, you have a lot of room here. So I'm in tier 1. If it shows relative strength, gets above 163.70, perhaps it could grind towards the 170, 172. If you look at some other names, I was in JP Morgan yesterday, which was a nice trade, for the VTF. I did sell it yesterday. Where is it? Hold on, JP Morgan, and to switch to Goldman. But this now is above the 200-day, obviously a lot stronger. This was the gap up on earnings. Here's where it held higher, and now it's had some decent action, and who knows, maybe it fills this gap all the way up to 65-ish, which would be a nice move, and hopefully that would help some of the other banks as well, which are trading a little bit better.
Yesterday we talked about Netflix being down hard pre-market and it never rallied. You mentioned it being in the penalty box. What exactly does that mean?
What does that mean? It means that it's almost not go-to status, and we have to see how long does it stay in the penalty box. Does it escape and not too much damage, or does it sit around and pretty much just become off the radar, et cetera, and change? So you look at the chart of Netflix, you'll see that you have this, this ascending channel here, that a gap below, and this is why we don't take stock into earnings, because it could put you out of business if you were long. It actually opened, down, tried to rally for, maybe 15 minutes, and then just closed on the dead lows. So for this, it's up 50 cents this morning. If you see some relative weakness, maybe people try and short it, and if it gets below this, 94.20, there's lots of room below. So the question is, how much downside will it get? Maybe it holds up and tries to, grind a little bit sideways, and then I've seen crazier things happen where at some point it tries to, fill this gap and show that it's not that weak, but that probably takes a little bit of time. So for now, I wouldn't overtrade Netflix, just watch it, trade it versus pivot. Maybe it trades below and then gives you a red dog reversal back up, for a long, and you could micro trade this thing because at least you have the levels, but overall for investors, or for a move back to highs, that's not happening for quite some time.
Now, what do Google and Amazon look like? Do you think that the action here at Netflix will affect their quarter?
Somewhat. There was a little bit of talk beforehand how Amazon was going to start to steal Netflix's lunch, that they were coming out with streaming videos and whatnot. And, so Amazon has acted better, and Amazon has a lot of other different types of businesses. I still think that Amazon, has the go-to quality, and at some point this year, takes out all-time highs. And Google is, totally separate. But, psychology-wise, it's just showing that these things have to report well and give good guidance. Otherwise, they're kind of priced for perfection. But yesterday, Amazon was a good trade to the downside for some who sold it quick. At this point, it didn't fall apart. We all know the right time to have been in it when it cleared this spot. So I don't think anyone was caught long after 1, 2, 3, 4, 5, 6 days. And now you do have the 8-day, which it held yesterday. Some guys made some money buying the dip. I would think that it probably trades in this range for a little while as its earnings are next week. So I wouldn't overtrade Amazon. Google, though, is Thursday. So it'll be interesting to see what happens. Google, shook the tree a little bit yesterday, came all the way back to the 8-day, a little lower than some would have thought. So at this point, I would just, not really touch it until Thursday, and then we'll see where we're at. And then, I'm not taking it to earnings, but, we'll go over how to trade it after market, depending on whether or not it could clear this pivot and what the report looks like. But overall, this technically looks good. So does Amazon, and Netflix is in the penalty box.
We spoke about IBM, which is also in the penalty box. What are the levels here? And if you don't mind, just show us the charts of Apple and Microsoft.
I don't mind at all.
Thank you.
And you'll see in earnings time, Chelsea, that some stocks get put in the penalty box and some, have great reports or great earnings, and those are the ones that we look towards on market strength. So at least with earnings, they give you the haves and have-nots, etc. And look at IBM's chart. IBM looks, similar to Netflix. Had a big gap down, has a huge hole in the chart. So the question is, how long does that stay? And, can you get a trade, around it? So here is the pivot low, and here's your pivot high. So the question is it even worth looking at? But probably, if it trades below this spot of 142.61, you have another area of support underneath it. If it holds and goes sideways for a while, and gets a pass, maybe gets above this and fills some of the gap. But the longer this gap stays open, the higher the probability it trades in the direction of that gap. Kind of like what happened here. Remember, this was when, to me, IBM was reborn. Gapped up, went sideways, never filled it, showed power, and then, cleared it. So we'll see what happens there. And you asked me about Apple. Apple at least gave us some clues on Friday when I got stopped out. Remember, I told you guys I was at lunch. I had my stops in here and got, boom, stopped out. And now it's below the 8, it's below the 21-day, it's back to being vulnerable Apple again. For today, if you want to scalp it, maybe it goes from red to green for a little trade, but I don't see much here. I would continue to wait. After 3 down days too, I probably wouldn't press lows here for a short because it's already coming from 112 down to 107, but it's not anything so compelling right now. And I think the last one you asked me about was Microsoft. Microsoft technically has one of the best setups. It's going to have to deliver on Thursday with major earnings, in order to get above this. But overall, it's been in a channel now for a long time, and really it looks like the measure moved from 49 to 52. If it delivers, we'll be north of 60. So who would have thunk it? You look at the chart of Microsoft when everyone said it was dead money. Here you are, trending all the way up. What a nice move this was when this took this out. So it looks the most technically sound.
Yesterday we mentioned Tesla was more weak and vulnerable, and then it got hit with the consumer report. How does it look now? Do you think it lost momentum from that?
Yeah, I think the reason why we talked about it yesterday was that the market went to highs and Tesla was on the side. Usually Tesla is better when it's leading versus just consolidating. So to me, it felt as if it could be vulnerable, and I think some guys in the chat room took advantage of the short. When Good Flow put the article out there that Consumer Reports was saying there could be something wrong with one of the models. But anyway, look at the chart. Ultimately, it couldn't get through this spot here, and then we talked about if this 247 couldn't hold, get out of the way, and you had a nice move down to the 21-day. And it was good to know where the 21-day is because the stock's been above the 21-day since all the way down here, so that was good support. So if you bought it on support, congratulations. But now I think this range is just going to need time. I would not be over trading Tesla. It doesn't report this week. I'll revisit this when it's tighter next week.
There are some question marks around Facebook and the ad spends, but it did show relative strength yesterday. And I know you went long it, right?
Yes.
So what levels do you think you need to go against, and what levels might you add to it?
Well, I like to hold verse levels just in case I want to see the strength stay. And Facebook's been a little bit erratic lately. That's why I've been avoiding it. But yesterday in the recap, I talked about how the relative strength came back midday when tech was getting the beat down. High beta tech was on lows, and Facebook wasn't going below 110. And then it took off with a decent upgrade from Needham. So anyway, you look at the chart. To me, just the chart, get away from all this messiness. Kind of repaired here. Couldn't get below the moving average, engulfed this prior 2-day move, and now it seems as if it wants follow through, it can get above this and act better. Okay, so if it were to get above 112.65, maybe I'll add to it for a quick trade and then hold what I have. But in order for this to kind of stay real strong to me, it's got to hold at least this 111.15-ish area where all the moving averages are converging. So at this point, it's kind of repaired, and it doesn't have earnings till next week, and then that's when we'll talk about whether or not perhaps it could take this high, these highs out. And some option hawks said yesterday there was a lot of call activity in the 111s through 114, so that's also sometimes a clue.
A new batch of familiar names popped up in the agricultural sector. Would you like to go over some of the charts that you bought yesterday for a trade?
Yes, I feel like I haven't traded the ag since, what was her name? Damn it, from thestreet.com. She used to love Mosaic, and she's going to kill me that. Getting old, I got a little memory lapse. She loved like Mosaic and Potash and all those when they were in play. And yesterday someone's like, hey, look, Scott, POT, had a really nice engulfing day or igniting day. Maybe this woke up. So I was like, that makes sense. It's been crushed, and they've been coming after some of these laggards. So I bought some of this, thinking that if it gets any kind of follow through at all, it could hit where it was right there. It triggered above this spot below the 200-day, but they are coming for names like this. And then you have Mosaic, which also had a big day. If I went like this and I inserted volume, you will see that the reason also, not just had a big day, is because there was volume attached. And for these type of laggard plays, you really need volume. So if you go here, you'll see that there was some, not that great of volume, but a better than average volume yesterday. I think POT really had a big volume bar, which was right there. So, you probably can go to a few of them. What does CF look like? CF also woke up. I don't even remember all the names in that sector, but the sector woke up. They've woken up before. Here it had a little bit of a move, before coming back, even when it was broken here. So maybe this day one will lead to, a move that is tradable for cash flow, because that's what we look to do, Chelsea, make cash flow.
Right. And metal started to shine yesterday. Why don't you go ahead and show us the charts for gold and silver?
I will definitely do that. Gold by itself, has been a little bit random and erratic in this upper range, but it's still in it and still looks all right. If you're trading it from day to day, though, it's been hard to have some success. Now you look at the GLD and you'll see there's another gap here. Okay, another gap to see whether it holds or fills, and there it is. So if we take a closer look at the GLDs, you'll see still acts really well, still in a channel. It's just trying to figure itself out here. Here is channel support. Here's the 50-day moved up. Now I guess see if the GLD can hold 119.37, okay, which is the gap. And then if it does, maybe it makes another attempt to take out the highs of this channel, which are north of 122. And then yesterday, someone brought silver to my attention, so I put it on the morning call, and what a move yesterday, and a huge gap. So at this point, hard to chase. What I would do is I would just see if this, gap digests, and if it could digest above that, chances are, maybe you could see another pivot here at 17. But it's come a long way, and it is silver, so don't be chasing, momentum. If you, bought it after this gap, I would think that was the compelling time to buy it versus up here.
Do you have any more closing thoughts for us?
Do I have closing thoughts? I could talk. What's today? Today, hump day?
Wednesday, hump day.
Yes. So midweek thoughts. We did get back to 2,100. The Dow did get back above 18,000. Some people are not in the market, and they're like, "How did this happen?" I thought, the world was going to end 2 months ago. Some guys are rolling up shorts and losing a lot of money. Trying to revenge trade and getting even more upset. I tried to do that for a day or two, and I hated life. I don't know how people could do that for 6 weeks. But again, I would say, like I've been saying, is look for setups versus looking for tops. The money's rotating, chart patterns are showing their face. There are guys having success following the trend, trying to be long above the 8 and 21 day, and not just short. Today, we might have. I don't think we're gonna have a blast off day, because I think we have a lot of earnings tomorrow. Tomorrow is Google. We have Microsoft. We have a few others. But we'll see if we could get some continuation in some of the names that we mentioned, and see if upper support holds or not, and try and put another day together as earnings season is in full force.
Okay, thank you. Everyone have a great trading day.